Okay, this is exercise 3, and it's about accounts and statements, and what accounts go to what statement. Now remember, balance sheets have assets and liabilities, and owner's equity. Income statements have revenues and expenses. Whoops. So, of these accounts over here, which ones go where? Well, you've got a payable here. So a payable is going to be a liability, and that's going to go to the balance sheet. So we call that AP, just so I don't have to type it all out, and it's a liability account. Number 2 is cash equivalents, which is like cash or petty cash, anything that can be turned into cash very quickly. So that obviously is an asset, and it goes on the balance sheet. So we're going to just call it cash, and we'll call it an asset. Again, you have crude oil inventory. Inventory is always an asset. So that goes and is found on the balance sheet. Equipment, same thing. It's a resource that we use to create either our product or our service, so that becomes an asset. Exploration expenses. Here's a key. Expenses, where do you think that might go? That's going to come over here on the income statement, right? And it tells you what kind of an account it is. It's an expense. It helps if you spell it right. You have a payable next. So where do you think that might go? Well, that's going to be income tax payable. And that's going to be found on our balance sheet as a liability. Investment, now typically that's going to be a little more specific, but an investment or an investments are always found on the balance sheet as an asset. What did I forget? I missed one. Exploration. Oh, exploration's up here then, isn't it? So now we have long-term debt. Okay, anything that's a debt is a liability. So that's going to be found on the balance sheet right here. And I'm going to abbreviate that. Debt equals liability. So that's a liability. And we have marketable securities. Now that's the same thing as investment. So that's going to be an asset. Next up we have notes payable. So what does that tell you? So that's going to be notes and loan. And that's a payable, and it doesn't go on revenues, it goes down here. Not sure what I was thinking about there. That's a liability. We have notes receivable. A note receivable is the opposite of a note payable, and that's an asset. Somebody owes us money, and they put it in a note, and a note usually extends out past 1 year. As compared to accounts receivable, which is very short term. So now we have operating expenses. Well, it kind of gives that away, doesn't it? Operating expenses. That's on the income statement and is an expense. So after notes receivable and operating expense, we're going to have a prepaid taxes, and anything prepaid is going to be an asset and found on the balance sheet. Here we have one, sales. That's a revenue account, and it's going to be found on the income statement. And finally, we have selling expenses. That kind of gives it away. And that's an expense. This is just sort of an exercise to show you how you can select accounts and where they go. Anything that's got a payable on it, a receivable, anything that is an asset that we would use, or something that has to do with what we own, owe, or have invested is going to be on the balance sheet. Something that deals with production, such as sales, or any expense that is used to create that sales, is going to be found on the income statement. So one other statement we haven't talked about here, and that's the statement of retained earnings, or it's sometimes called statement of owner's equity also in some cases, or capital. We're going to, the accounts used for that are going to be capital. In the case of a proprietary or common retained earnings. In the case, wow, that was a mess, wasn't it? Retained earnings. In the case of in the case of a corporation. Other things that would be taken into consideration or other accounts would be withdrawals or dividends. And then net income or loss would be involved in this. And actually the net income and / loss is a very, very brief, fleeting account because it automatically gets folded into the retained earnings or owner's capital, be it a proprietaryship or a corporation. So those are your accounts that we're going to be dealing with. Kind of got to hold on to them. Remember, an expense or a revenue is always found on the income statement. A liability, an asset, or an owner's equity, this here, is found on your balance sheet. And those are folded in from the statement of retained earnings. So that kind of gives you an overview of accounts. Again, we're going to close this up and we're going to go on to transactions next.